Hello, my name is William Mwenda and this is Business Time. It is a magazine program in which we bring you major business and economic news stories making headlines in the country. And in the program today, we look at strides the country is making towards economic recovery months after the launch of the Socio-Economic Recovery Plan. And also in the program, deficit of trade continues to widen as Malawians continue to have an insatiable appetite for imports. We have these and other stories. Stay tuned. Hello and welcome. This is Business Time. In our main story in the program today, in December 2021, President Lazarus Chakwera announced the Socio-Economic Recovery Plan aimed at moving Malawi out of the pangs of the COVID-19 pandemic. The plan is targeting 3 years for Malawi to move from the effects of the pandemic and other situations that have had a knockdown effect on the local economy. About 3 or 4 months down the line, some experts say there is more that needs to be done if the country is really to move towards the recovery of the economy and strides for growth. We have the whole story in this report. This was the state of the Kapitchiro hydropower station, which suffered extensive damage, particularly at its intake dam following the flooding of the Shire River due to Tropical Storm Anna. It would cost the country, which is yet to walk out of the pangs of the COVID-19 pandemic, a whopping 18 billion kwacha to restore and repair the damage. The two, weather-related shocks and the pandemic, have had a devastating effect on businesses and the economy at large. In December 2021, President Lazarus Chakwera launched a 580 billion kwacha 2-year socio-economic recovery plan to at least stimulate strategic parts of the economy.
The further aspect of the socio-economic recovery plan to address the effects of the pandemic.
3 months down the line, experts feel the plan is unlikely to succeed in pulling out the economy from doldrums induced by the pandemic and other shocks. At the weekend, business captains under the Malawi Confederation of Chambers of Commerce and Industry met in Mangochi in an attempt to chart the way forward. They feel the prevailing economic challenges continue to stifle chances of growth of the private sector in the country in the short to medium terms and its input to the national economy. The Chamber's immediate past president is James Chimwaza.
It's a big challenge. There are no straightforward solutions because after COVID, we've had additional challenges. We've had the rise in fuel prices. That was a big challenge. And then we've had the Ukraine and Russian situation. It may sound like just an event in the northeastern corner of the world, but there's a lot that impacts Malawi, that impacts Africa from that corner. All those challenges are in it. So we have to bring those on board as well. But what it is saying is we need to bring down our cost of production.
From a look of things, the government is under pressure too to fund the recovery process. Minister of Agriculture, Lobin Lowe, concedes that the impact of the pandemic and other external shocks to the economy remained severe.
We can still live with COVID and maybe any other challenges because for a long time you can appreciate how COVID has hit us heavily as a country. We have an economy which is failing to tick. So the message to the public or to the business gurus is, can we find solutions to make sure that COVID is here to stay, and we shouldn't maybe just sit down and observe other countries ticking. We should also join other countries because we have an economy to promote as a country.
NBS Bank Deputy Chief Executive Officer Temwani Simwaka, who was one of the key speakers at the conference, said the industry, however, has a key role to play towards the recovery.
Some of the issues we spoke about was around our own investments in people, in basic education, and also in continuous development.
Earlier last week, global economic think tank, the Economist Intelligence Unit, said the 580 billion kwacha socio-economic recovery plan is unlikely to succeed as it is coming at a delicate time politically, with the government under pressure to match its 2020 election rhetoric to tackle poverty with action in the face of growing discontent. But when all is said and done, hope is that restoration of the infrastructures like the Kapitula hydropower station would symbolize a step towards the recovery. In the interim, the nation is on a wait-and-see situation. Now, Malawi continues to be a predominantly importing and consuming nation, a situation that has been piling pressure on forex availability in the country. The country has been attempting to move towards import substitution, but for years now, we've seen the gap between imports and exports widening in favor of imports. What is at stake? This is a question our journalist Chimwemwe Mangazi attempts in this report.
Economics Association of Malawi Executive Director Frank Chikuta says the trade balance has been in deficit for a long time and that the major reasons include structural bottlenecks in the economy. He said such challenges have resulted in the country not producing enough competitive products for the export market.
There is a bit of concern to the economy, but just to say that the trade deficit, the trade balance has been in deficit for quite a long time. ECAMA did an analysis to see how we have trended in terms of the deficit since 2000. And since 2000 up to 2020, we have always been in deficit in terms of our trade balance. So you can see that we have been in deficit persistently over more than 20 years. So this is a worrying situation. The only improvements which we have had over the period of analysis were where the deficit was narrowing, but we never ran a trade surplus over those years. So it's a worrying situation, and it's something which needs to be urgently addressed if we are to improve our balance of payments position. Yes, the underlying factors really, because as an economy, we are not producing enough competitive products for the export market, and two, for import substitution, where instead of importing some of these products, we could be producing them within the economy and then trading them within the economy. The problem emanates from a number of structural challenges which we have as an economy. I can point out one or two. One is the energy supply. You would have noted, the supply of electricity to our economy is intermittent. So if you have to invest in a production plant where you are producing products of quality which can be easily exported, it becomes difficult because if you are using alternative sources of energy, one is costly. So it means that the products which you produce are also going to have a higher selling price.
Economist Thomson Kumwenda says the easiest way to reduce the trade balance is by encouraging production of commodities in the country.
If you look at the structure of our exports, the country basically exports almost 62% of what it sends outside the country are raw materials, basically agro-based raw materials. And then the country imports about 95% of finished products that are made in other countries. So you can actually see, and then also the country imports maybe about 3% of raw materials that it uses to process other items in this economy. So you see there's a huge variance between what we send out and what we bring in. The country doesn't send out processed stuff or finished goods that would ordinarily fetch a higher price than what it spends mostly. We import cars, we import fuel, we import medicine, we import fertilizer, we import a lot of stuff. Of late, we're even importing food from South Africa and so on. I think, in my opinion, the main problem started way when we introduced the structural reforms programs in this economy. I remember in the early 80s, when the Dr. Banda regime was facing pressures, and again, from the international institutions like the World Bank, the IMF, They brought in structural adjustment programs in the economy where the government had to privatize a majority of its stake in some of the parastatals or some of the manufacturing companies, and the economy actually opened up. They advised the government to open up the economy from outside, and then also allow a private sector-led economic growth program.
Recently, the Malawi Investment and Trade Center, MITC, said it was committed to reversing Malawi's negative trade balance by, among other things, boosting exports and promoting import substitution.
Now, the Malawi Revenue Authority has moved to implement the advance income tax, about 3% on imports, effective 1st of May this year. This was said during a press briefing by Chimwemwe Kawalewale, who is Deputy Commissioner for Customs and Excise. Now, the question is, who is MRA targeting with the measure?
Advance income tax, which in short we are calling AIT, is a tax that will be levied on imported commercial goods at a rate of 3% of the value for duty purposes at the time of importation. Advance income tax is not a new tax. It is just a way or means of collecting tax, and it is advance payment of income tax, which is the tax that one pays on the profits that they make as they transact business. This is the reason why the tax is being levied on commercial goods, because it is being levied on people who are involved in business transactions. Now, what is going to happen is that advance income tax will not be paid prior to importation of goods into the country. In other words, we are not expecting importers or business people to pay before goods arrive in the country. We will only demand payment of advance income tax once the goods have reported in the country at the time of processing the border clearances at our borders. What happens at the moment is that we have so many people who are involved in business transactions, but not all of them are compliant, or they are coming forward to pay the taxes that are due to government. This creates an unfair sort of environment where the playing field is not level. As a result, we have compliant taxpayers suffering the tax burden, and some people getting away with no payment of tax at all.
Remember, this is Business Time. It's a magazine program in which we bring you major business and economic news stories making headlines in the country. And my name is William Kumwembe. We'll be right back. Welcome back. This is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And moving on with the program, the Reserve Bank of Malawi has in the past months been soliciting gold from miners in the country. The central bank says it will from next month start processing and exporting the commodity, a situation that could at least bring in some few forex into the system as the country has been grappling with forex wars. Now, we caught up with the RBM spokesperson, Raf Tseka, for an insight as to how much gold has been bought and how the prospects are on the international market.
We did take the initiative to buy gold. At the moment, what I can say is that we are still buying. We are almost reaching the 100 kg mark since we started buying the gold. And our idea now is that when we reach a 100 kg mark, we'll send the gold for processing. And when we send the gold for processing, it will be put in gold bars, and then we'll export those gold bars to either Dubai or somewhere to sell them and start earning the foreign exchange. We are monitoring the international market for gold so that we see how much are we going to earn from this gold that we have already bought vis-a-vis the Malawi kwacha that we have already spent on buying this gold. It's about a month from now, because we are almost hitting the mark of 100 kgs, and if that is the case, I think we should be ready to do that. We had a session. We went with the governor to Reserve Bank of Zimbabwe. They also started the way we have, buying alluvial gold the way we are doing. Now they've really gone up. Since last year, we have from May last year up to now, we are more or less catching now on 100 kgs. But for Reserve Bank of Zimbabwe, they are actually buying on a monthly basis something like 2 to 3 tons every month of gold. So you can see that's huge. And if we can go through that route as well, we can see how we will fare. And again, in our trip to Zimbabwe, we noticed that Reserve Bank of Zimbabwe is a refinery. So we intend to send our gold to Zimbabwe so that they refine the gold, put them in gold bars, and then we'll see what happens from there.
Moving on with the program, and now to agribusiness news. Tobacco remains Malawi's main forex earner and main export crop. But for years, revenue and output of tobacco has been dwindling. It's been 4 weeks since the opening of the 2022 selling season of the leaf. But both revenue and volume traded seem to be way lower than the same time last year. Our journalist, Justin Kwe, has been following trends on the market and has filed this report.
On 31st last month, President Lazarus Chakwera opened Lilongwe auction floors, thereby also marking the start of this year's tobacco marketing season. The opening was earlier than what happens every year, to which Tobacco Commission defended by saying they want farmers to start selling and have their money back fast. The volumes, however, were not impressive, to which the Commission said it was expected because of the early opening of the markets and delayed rains. TC spokesperson Teleforest Gwenembe says tobacco volumes to Lilongwe auction floors, however, have improved by more than 100% from 3,000 bales per trading day on the day it was opened to 6,479 bales as at last week Friday. According to Gwenembe, in the 4 weeks of opening the marketing season, low volumes were expected as the selling was started earlier than in previous years, and a lot of growers were still preparing their leaf. He added that the highest valued leaf on the auction as of Friday last week fetched $2.40 per kilogram, while the least valued leaf went at $1.30 per kilogram, which was barley.
At Lilongwe floors, in the first 2-3 weeks, we saw that the volumes were low as expected. But starting the 4th week of the marketing season, of the tobacco marketing season, we have seen that sales are peaking from less than 3,000 bales per day to 6,000 bales per day of trading. And this was expected because at the beginning of the season, we indicated that we were opening the season much earlier, a little earlier than last year or earlier than in previous years, just to create an opportunity for those farmers. So we expected that not many farmers, we knew that not many farmers were ready, and but we thought it would help to open the season earlier so that the few that were ready could sell their tobacco. So in week number...
Apart from the Lilongwe market, Limbe auction floors also opened last week, where farmers complained that prices were poor. Despite this, Tobacco Association of Malawi Tama Farmers Trust President Abel Kalimabanda believes the future for the leaf is bright. Chinkoma and Mzuzu auction floors are expected to open on 27th April and 9th May, respectively.
Now moving on to other business news, there's been some drought on the listing of government securities on the Malawi Stock Exchange. This has been a concern for quite some time. Our journalist Chimwemwe Mangazi caught up with Chief Operations officer for Malawi Stock Exchange, Kalin Kanyangala, to look at the trends on the local market and see what needs to be done.
As you know, on the Malawi Stock Exchange, we have 3 platforms. We have the main board, the alternative capital market, as well as the debt platform. For the main board as well as the alternative capital market, that's where companies can actually issue equity if they want to raise capital or financing through equity. And then on the debt platform, that's where companies or other institutions, including government, can actually raise financing through debt securities that they actually issue to the public. So currently we have quite a number of securities on the debt platform. We have 2 securities that were issued by MyBucks Banking Corporation, those are corporate bonds, and then we also do have 44 debt securities that were issued by government. So on 25th this month, we did register a trade on one of the government securities. That is the first of its kind on our market. I think if you recall, last year, somewhere in April, we had registered 2 trades on security that was listed by MyBucks Banking Corporation. So this is the first one when it comes to the government debt securities. And as you know, I think the issue of tradability, secondary trade, especially for government securities, has been something of concern, not just here in Malawi, but even regionally. And I think there have been quite a number of initiatives that have been put in place to try to spur activity on this market. So if you look at the domestic market or locally, what we've done, as the stock exchange specifically, we've been involved in capacity building of our members, trying to accustom them to the trading of the debt securities and even the bond pricing itself. And one of the other initiatives is that we've also incorporated commercial banks as participants in our automated trading system, meaning that they can also be part and parcel of the buying and selling of the debt securities.
Well, with that story, we've also come to the end of today's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumwembe. Always remember, if it doesn't make money, then it doesn't make sense. Stay safe and bye for now.